First, breaking housing data just crossing. Diana Olick has that for us. Diana.
That's right, Leslie. Builder sentiment in the single-family housing market dropped 1 point to 32 in August on the NAHB index. The street was looking for a 1-point gain. Anything below 50 is considered negative. Last August, it stood at 39. Now, the builders pointed to elevated mortgage rates, weak buyer traffic, and ongoing supply-side challenges. Mortgage rates, though, actually came down nearly a 1/4 point from the end of July to the first few weeks of August. But that clearly didn't help much. Now, of the index's 3 components, current sales conditions fell 1 point to 35. Sales expectations in the next 6 months was unchanged at 43. And buyer traffic did increase 2 points, but just to 22, so still the lowest of those 3 indices. Now, 37% of builders reported cutting prices in August. That's down from 38% in July, but it's been at 37 or 38 for the past 3 months. The average price reduction, 5% in August. It's the same it's been every month since last November. But the use of sales incentives was 66% in August, up from 62% in July, and that is the highest percentage in the post-COVID period. So again, the builders relying on those incentives. Guys, back to you.
Diana, I'm curious why estimates were for a gain and kind of what led to the gap there between expectations and the actual numbers you saw.
Mortgage rates. It's as simple as that. When you see mortgage rates come down, that's why when mortgage rates come down a little bit, you see the builder stocks go up, whatever the day, whatever the situation. So when you saw mortgage rates go down, I'm guessing all the analysts said, well, builder sentiment must go up. But the builders on the ground are really seeing who's coming in, who's putting money down, who's really able to afford these homes. And at the current rates, even a 1/4 point lower, they're just not seeing it. So that's probably what's behind the miss.
Yeah, makes a big difference there. Diana, thank you so much.